Good afternoon and welcome to the Ezra Digital 2021 Education Series. My name is Mallory and I will be your Ezra moderator. The Electronic Signature and Records Association was formed to educate and advocate for the use and acceptance of digital signatures, records, and transactions. Our members are dedicated to providing, promoting, and participating in the Ezra values of expertise, leadership, collaboration, accessibility, and technology neutrality. As part of Ezra's educational mission, we have created this education series. The education series provides insight and practical guidance on the business, technology, and legal implementation issues across a wide spectrum of applications. These include presentations by Ezra members and their partners on topics ranging from remote online notarization, digital mortgage and auto finance, to the use of voice signatures and other biometric methods to authenticate signers and execute documents. Although eSign was enacted over 20 years ago, there is still a learning curve as companies continue to transform their business practices. These transformation issues are even more critical as we have progressed through this time of social distancing, remote work, and contactless consumer engagement. We hope that you will find these webinars useful. Now, it is my privilege to introduce our speaker today, Fred Gooch from First American Docutech. As part of the holistic First American offering, First American Docutech makes it easier to close loans faster and digitize the entire process by offering the right solution for each lender's unique strategy from point of sale through post-closing. Fred Gooch serves as Operations Counsel and Senior Vice President of Compliance for First American Docutech, a part of the First American family of companies, providing an end-to-end integrated digital mortgage experience that enables lenders to accelerate the real estate closing process. Gooch oversees the legal and compliance teams, ensuring that First American Docutech's substantial document library complies with all federal, state, local, agency, and investor regulatory requirements. Gooch graduated from Utah State University with a Bachelor of Arts degree in economics and received a Juris Doctor in law from the University of Idaho College of Law. Please welcome Fred.
Thank you. Well, we're going to go ahead and get started today. Hopefully this presentation serves a couple of purposes for you. We'd like to be able to kind of give some background into what's going on in the world of eClosing in the mortgage space right now, and also let you think about some of the challenges. Number one, the challenge of how the market is transitioning right now. From a refinance to possibly more of a purchase market, and to think about how eClosing can benefit you in this circumstance, as well as if you haven't started eClosing, some of the things that you need to think about, and some of the things that we have seen our customers be successful with as they have gone to implement an eClosing system. So this is our agenda. We'll talk about the market a little bit and talk about transitioning to eClosings and how eClosings work. We'll talk about eNotes and the settlement experience, and as well as what's going on in the world of RON, remote online notarization, as well as take a look at what takes place and how the eClosing and digitization of the mortgage process can help you in the closing scenario as well as post-closing activities. So first, we'll talk a little bit about what's going on with the market right now. Rates are increasing, and the refi volume is continuing to decrease year over year, as well as we see an increase in purchases. So we're shifting from a refinance-centric market to a purchase environment, but the housing market still appears to be strong, and there are a couple of reasons for that. Number one, the supply of homes continues to be tight, and that event, along with the fact that many borrowers have increased purchasing power, as well as a continued acceleration in the formation of households, is leading to some supply constraints in the market. And so all of this kind of leads together to a housing market that continues to be historically strong. From a from a raw transaction standpoint, it's probably not going to be as strong as it's been the last year or two, but historically speaking, a very strong housing market, but one that is transitioning from more of a purchase to from more of a refinance to a purchase scenario. So what's going to happen? Well, one of my favorite quotes is from the famous baseball philosopher Yogi Berra. He says that it's hard to make predictions, especially about the future. So I don't know if my predictions or our predictions are worth a whole lot, but if you take a look at the market in general, existing home sales seem to be positioned, and the overall housing market seem to be positioned to continue to increase. The economy is continuing to accelerate due to vaccine rollouts and increased consumer and lender confidence coming out of the pandemic, as well as a strong labor market. So we can continue to expect a strong demand and a short supply of housing, and so housing will remain. We think that housing will remain strong. The housing market will remain strong, even in the face of an increasing mortgage rate environment. However, the mortgage rate environment, while it is increasing, the rates are still very low from a historical perspective. So the economy will continue to recover from COVID-19, and we'll see how it goes. So those are our my projections for what it's worth. If you take a look at what's taken place with eClosing in the past year, some form of eClosing has been implemented dramatically across the industry. And if you look at the growth, right, this is obviously fueled by the pandemic, but transactions with some component of an eClosing were up 400% year over year. So I mean, you never would have got to that number outside of a worldwide pandemic, but it's here, and it has definitely accelerated the pace of eClosing and made a lot of lenders take a look at what's possible in the world of eClosing. The number of companies that are transacting on the MERS e-registry for eNotes is up significantly, about 127% year over year. And then you can also see that there have been a lot of companies that have been very successful in implementing eClose. And one that's been in the news quite a bit is Rocket Mortgage. They delivered 90% of all digital closings with eNotes in the first 3 quarters of 2020. And that was more than 2 times the amount of eNotes that were delivered in all of 2019. So fueled by the pandemic and also by convenience, we see eClosings continue to increase and to accelerate. So a few key takeaways that we're going to have for each section of this presentation. When we look at the market as volumes normalize, we're going to need to continue to focus on digitization to reduce costs as we shift from a refi to a purchase market. There will also be less borrowers, and so there will be increased competition for market share. And it's going to be very important to deliver the best possible experience that you can for consumers. I like to say everything has an E now, right? So I like to say that consumers have E expectations. They expect everything to be as electronic and as convenient as it can possibly be. And so you want to make sure that you're taking steps to digitize your processes so that you won't be left behind in this scenario. So sometimes the hardest thing is getting started, and we wanted to spend a few minutes going over some of the things that we have seen help our clients be successful as they look to implement an eClosing system. And so here's just a basic checklist that you can look at. So the first one is obviously to define the scope of work that you intend to accomplish. And as you look at eMortgage, are you going to roll out with a hybrid or a full eClose? Most of our clients, we see and the ability to roll out into a hybrid process and be very successful in a short period of time. And so that's definitely the path that we see most people taking. But you also want to consider what channels you're going to be participating in, what your use of RON is going to look like. Are you going to limit your rollout to certain states, certain counties, geographically, that are more accepting of electronic mortgage processes and have the infrastructure and the regulatory scheme to be able to support it? So all of these things are considerations that you should make as you go to define what you're going to accomplish. The next one is to plan with your partners, your loan origination systems, your point of sale systems, all of your partners up and down your chain for your origination process. By now, almost all of these partners, I would imagine, have all dealt with rolling out a eClosing system. And so they have experience and best practices that they can share with you. And so I would, that's something that we do at First American Docutech is, we are able to share best practices and what works and what doesn't work so well, and to help you really put a plan in place that's going to be successful. Then you also need to determine your system readiness. So these are the same platforms, right? If your eSign and your eClose platforms, wherever they come from, make sure that they're ready to go. Also, have a plan for an eVault that includes an integration to the MERS Note e-registry if you're going to be dealing with eNotes. And then operational readiness is really, really important, and it is almost more important than the system readiness, because what we find is that most of the systems are ready to go with eClosings, but where we struggle with can be the rollout. So make sure that you are ready from an operational standpoint. Review and update your policies and procedures, have plans in place, make sure that you've got training in place internally for your people and externally for parties that you'll be interfacing with in the closing process. Make sure that you're ready to go from a servicing perspective, and that you have a plan to communicate with settlement agents to make sure that all the parties that are necessary to be involved in this process are ready to go. And then you also want to take a look at your investors and make sure that you've got the appropriate approvals in place to proceed with eClosing. So we also are looking at best practices that help people be successful. And you see a whole bunch of the W questions here in define. So you need to have an executive sponsor or a high-level sponsor within your organization who can explain the why of why you're rolling out this eClose system, and can be a champion internally for to drive the process forward. A project lead that can define what's going to happen and when it needs to happen. A cross-company project team that can define and buy into the who and the what. And then you also need to define goals as to what success is going to be for your project, so that you can measure it, and so that you can celebrate those successes. If you don't celebrate those successes internally with your team, then it becomes more difficult to build momentum. I find that as we take the opportunity to celebrate the milestones that we reach, it continues to drive our team forward to attain more success. Your project needs to be measurable. You want to be able to monitor your volume and success by channel, by branch, by employee, so that you can find out where the issues are, and so that you can continue to celebrate the successes. Communication is key in the process, as you need to be able to generate reports and report up to senior management, and continue to make sure that you've got the buy-in from that level for your project. We've talked a little bit about celebrating our successes and driving accountability. Make sure that you have a solid training program in place to communicate guidance to everyone that's going to be involved in the process. And then the final stage is the implementation stage. So you want to be able to have your process set up so that it can operate as smoothly as possible. So you want to be able to default to electronic processes wherever possible. We find that that's the most successful way. If you allow certain parties throughout the process to be able to have to opt in, then it becomes more difficult to get people to take that initial step to change their process, even though it's going to be more efficient. and then also simplify your implementation, get a phase one minimum viable product out the door so that you can have a success and minimize change. So your best practices for getting an eClosing system rollout is obviously to make sure that it's properly defined, that you can measure your progress, that you can communicate your training as well as problems that you might have and successes that you have, and then successfully implement. So as we move on to kind of a little bit of the nuts and bolts of eClosing, this is quite a chart right here. But if you look at it on the left side at the beginning, you can see that we have the components of an eClosing, we have the dependencies and considerations that you have to consider, and then also the population that's covered by certain processes. So the components you've got, we're really looking at this from a very document-centric point of view, but you've got the ancillary documents that you might have in a closing package, like your lender-specific letters and information, as well as state and federal disclosures. These are generally documents that are there for informational purposes and also to cover your bases from a regulatory process. And then you've got obviously your promissory note, your deed of trust. These are really the kind of the main buckets of documents that you have in a package. And so if you look at a hybrid scenario where you're going to only have certain documents that are going to be signed electronically and some that are still going to be signed in paper, for sure you can e-sign your ancillary documents, and then oftentimes the note and the deed of trust will be generated in paper and will be signed in paper, and then the recording will take place on paper, and the title documents will also be in paper. And then as you move down the continuum or the progression for eClosing, you can move to where you add e-recording to this scenario, where you've got a paper mortgage, but it's going to be scanned and it's going to be recorded electronically. And then if you can move to implement an eNote, where you're going to have an electronic smart doc eNote, and you can add that to the existing processes of the electronic ancillary documents. And then you can e-record the mortgage as well. So you're just moving down the continuum here. You can add electronic notary, which this is an IPEN, in-person electronic notarization, where the notary is still physically present, but they can apply their seal and their signatures electronically. So this allows you to move to a fully electronic mortgage. So there's no scanning of any ink signed paper documents, and those can be e-signed. And then you move to a RON scenario, where the notary is not physically present with a paper note or with an eNote. And so as you see, the interesting thing here is that if you look at just the basic hybrid, where the ancillary documents are electronically signed, everything else is in paper, you can do that anywhere in the country, 100% coverage. And then as you add different elements, you see if you're going to utilize e-recording, it's about 88%. And then you slightly move down, but there's still quite a population coverage, a very high percentage of the population that can be in a scenario where these electronic processes can be implemented. So there's a lot here on this chart, but something that you can take a look at to get an idea of how these different phases of the transaction play out. So this is kind of a slide that goes over the ecosystem of what's included in an eClose transaction. So I've already talked about this, and since I work for a document company, I tend to take a document-centric view to this approach. But if you look here at the center of the slide, you've got the closing package, and you've got it separated into the eNote, so the obligation to pay, and then the notarized documents, which are usually those that support the collateral, deeds of trust, security instrument, various riders. And then you've got the ancillary documents and the title documents. So these are the kind of the core document components of the closing package. And then if you look over to the left, you can see how we get the data and the borrower to act on these documents. So these documents can come in, the first three, the eNote, the notarized docs, and the ancillary docs can all come in from a borrower portal or a loan origination system, which feeds the data into a doc engine and to a signature engine to execute these forms. And then these forms can be stored in an eVault as you move down the diagram. In a vault, and then the eNote itself can also should be stored in an eVault. Now, as you move to the right side of the diagram, then you see the processes. So the notarized documents need to be notarized, so you can have an eNotarization. Then there's the ability to e-record with the county recorder, and then the settlement agent is able to receive the titlement documents and send them through the title and settlement process. The eNote will also be sent. If you have an eNote, it will be sent to the MERS e-registry, where it can be transferred, or it can be the information pertaining to that note can be transferred or communicated downstream. So this is kind of the ecosystem and the basic components and solutions that you have to have. You have to have a way to get the data into these systems. These systems have to be able to generate, and they have to be able to execute these documents, and then they have to be able to transfer them or process them downstream into the closing, after the closing, through these various scenarios, so that the collateral can be perfected and that the notes can be transferred to their owners as needs be to facilitate secondary market activity. All supporting this is a vault, and particularly an eVault that has all the information that you need to identify the location and who owns the notes. So that is the ecosystem, the components of an eClose system. One of the important things to do at the very beginning of this process, as you look to do an eClose, is to determine how this loan can be, meaning how electronic can it be based off of the various constraints that exist out there. So things to look at would be investor acceptance, who you're going to be selling these loans to. Do they accept eNotes? Do they accept RON? Almost all of them will allow for the ancillary documents to be signed electronically, but some of them might have restrictions on when they can be signed. So most systems will not allow you to sign these documents until the actual day of closing, to the consternation of some parties. But that way, all of the documents will have the same signature date on them, whether they were signed at the closing on paper, or whether they were closed prior in an electronic process. You also need to look at you also need to take a look at the notarization and how that's going to work. Most states have an in-person eNotary statute that allows an electronic in-person notarization. Does the state allow for remote online notarization? And then you also have to look at basic notary qualifications. And then you want to also consider the recording part of the transaction. County recorders, are they able to accept an electronic notary, like an IPEN? Will they accept RON, or will they accept both? Are you going to run into problems at the county recorder's office if you have a notary acknowledgement on these documents that's from a different state than where the property is located and where the instruments are going to be recorded? Generally should not be an issue based off of state notary laws, but sometimes you run into issues there as well. And then just in general, will the county recorders accept the mortgage or deed of trust documents that you're going to be sending to them? So the idea is, up front in the transaction, if you can gather enough data to know exactly which components of the transaction can be done electronically, it really streamlines the process and makes it much easier and smoother as you move through. So some key takeaways on eClosing would be to have a system or a process in place to determine how or electronic every loan that you're going to generate is going to how it can be through an e-eligibility process. We find that most of our clients are most successful if they start with the hybrid approach, because it gives you the ability to roll out on a very wide basis and to get a lot of the lift that comes from the eClosing process very quickly. And then once you've got that hybrid approach taken care of, then you can start to bolt on to that by adding eNotes, adding eNotarization, adding additional functionality that will continue to make the process quicker and more efficient. Taking a look at what's going on with eNotes, we've talked about the increase in electronic mortgage transactions, and you see the same thing taking place in the world of eNotes. If you look at the 2021 numbers based off of where they were a year or 2 years ago, it's a dramatic increase. So over 1.1 million eNotes have been registered with the MERS e-registry. And you really see it just take off last year due to the pandemic. But the number of eNotes continues to be strong. The good news is that there's still a ton of room for growth here as well. And an eNote adds a tremendous amount of efficiency to your process, and also comes with a lot of cost savings. When considering eNotes and eNote acceptance, you have to look at all of the different institutions that might deal with that might set the ability for the eNotes to be liquid and how quickly they can move through the system. So you need to look at the GSEs and Ginnie Mae. They are really the largest mainstream investors that are accepting eNotes right now, but also commercial warehouses. The Federal Home Loan Bank system continues to roll out new guidelines, and you see this in the news recently over this year, as they are operating pilot programs, even some state housing programs as well. But particularly the Federal Home Loan Bank they've got guidance out there and are starting to accept eNotes, and then private capital as well. And like I mentioned, even some state housing authorities are starting to dip their toes into the world of eNotes. But in order for eNotes to be completely accepted across the board, all of these different pillars have to be actively engaged in collateralizing and the trading of eNotes. So key takeaways on eNotes is that they continue to grow. Their usage continues to grow dramatically. Investor acceptance is also growing, as just the benefits of the transparency associated with an eNote, as well as the ability to transfer it efficiently, and the ability to just keep track of it is such a great benefit with the eNote that we see investor acceptance continue to grow. And then there are also just benefits from using an eNote in and of itself. A lot of times lenders or institutions don't want to move to an eNote until they can have RON in place, so that you can go totally electronic. But really, there are a lot of benefits of just using the note electronically, even if you're not able to utilize RON, and you still have to sign a paper security instrument. So there are just a lot of benefits in rolling out the eNotes. So we're going to take a look a little bit at RON and some of the safety considerations associated with RON. One of the biggest challenges with RON has been the fact that traditionally the Notarial Act has been there to safeguard the parties that are signing the documents, to make sure that there is no fraud or undue duress that's placed on someone who is executing an instrument. And it's also there to protect the, in the mortgage lending circumstance, right, the lender who's the secured party, to make sure that the person who signs the documents is indeed the person that they claim to be by verifying their identification. And so there are a lot of concerns around privacy or around security when it comes to remote online notarization, and taking this traditional act of notarization and transferring it into an electronic world. Fortunately, the RON systems that are out there in the marketplace now are extremely secure. They provide multi-layer authentication and verification. One of the great things about I think about RON is that you have and can maintain an actual video of the signing ceremony. So if there was some question as to what took place during the signing ceremony in the paper world, you might have a notary that's maintained their notary journal and they have some basic information about the transaction. But if some element of the transaction comes into question, you're really dealing with the memories of all of the parties that are involved. Whereas the cool thing about a RON is you've got the actual video of the execution of the documents, and so that I think is a very strong evidentiary piece that can be utilized there to support the transaction. So, oftentimes we're looking, and oftentimes we look at the question of RON eligibility as to what states allow RON, and really, states pass laws that govern the activities of the notaries in their jurisdiction, and so states pass laws that allow notaries to perform the notarial act in different manners. And so as you look at RON and eligibility for a transaction where you're using a remote online notarization, you need to look at whether it can be recorded in the jurisdiction. Will the county recorder accept the deed of trust from a RON closing? Will the title insurer accept and insure the transaction if a RON is utilized? And then you also need to take a look at whether the investor will purchase an eNote a transaction with an eNote that comes from a RON closing. So you need to look at what the state law allows their notaries to do, as well as these different legs of RON eligibility. So here's a chart that comes from Alta, and it gives you a lot of these acronyms when it comes to notarization, and it seems like you get another one of these every couple of months now. So this is a chart that's helpful to define what is a true remote online notarization, what is a paper remote online notarization. That would be where the remote online notarization takes place, but paper documents are utilized, not electronic documents. Then you've got RIN, which is one that really came out of the pandemic, which was remote notarization of paper documents on audio-video communication. So these state reactions to COVID-19 allowed, in a temporary fashion, some notaries to be able to view and authenticate a borrower over something like FaceTime or Skype while they sign the paper documents, and then they would mail them back and forth. I have not seen very much acceptance of that in the mortgage transaction, just because of a lot of questions, and just the size and the nature of the transaction, I think, has made the remote eSign notarization something that has been viewed with a lot of scrutiny and just not utilized, but it is out there in some of these temporary orders. Then you've got traditional wet ink notarization, which is just old school notarization on with wet ink and with paper and with the notary present. Sometimes that's called twin. So that's a new acronym for you. And then you've got in-person electronic notarization, where the document is electronic, the notarization certificate and signatures are applied electronically to the electronic document. However, the notary is in person. So there's all different flavors of notarization and different types of terminology that seem to be changing, and lots of acronyms to keep up with in this space. We touched on this in the last chart, but RON statutes, remote online notarization statutes, are generally permanent, and there are terms in place and provisions in place to protect the consumer and the notary and the integrity of the notarial act, whereas RIN was really a reaction to the pandemic, and this is the remote ink sign notarization, where you sign the paper documents over some kind of communication technology, and then you mail them back and forth. Just haven't seen much acceptance of that. And so really RON is the long-term solution here, whereas RIN is a reactionary process that was put in place to help business continue during the pandemic, but we just haven't seen much acceptance of this in the mortgage lending space. If you look at this chart, this is a chart that was provided to us by our friends at Notarize, a remote online notarization provider, if you're not familiar with Notarize. But this chart here shows that really in all of the states across the country, with the exception of just a couple, there is either legislation for RON that has been signed by the governor and is effective law, legislation that is in some stage of being made, whether the legislature has passed it and they're awaiting signature, whether it's been introduced, whether there's some spot legislation. You can see that there is a significant amount of activity taking place across the country dealing with RON. And then the next slide that we have here shows the regulatory activity, whereas this is as of a couple months ago, as of April, we had 32 states that had passed permanent RON laws, 2 states with temporary RON laws, and a handful of states that are still awaiting regulation. So it just continues to be able to be accepted in more and more jurisdictions. So this is good news. These are some stats that were provided to us by our friends at ICE Mortgage Technology, also that deal with e-recording, the old Simplifile product. And so you can see here that that counties that are accepting eNotary is significant. There's 63% of the counties, but if you look in blue, the percentage of the population that is covered by those 63% is 88% of the U.S. population lives in a county where eNotarization is accepted. And then you look at the different numbers here for IPEN in-state and IPEN out-of-state, RON in-state and RON out-of-state. And so if you look at it from, adoption continues to increase across the various counties and states in the country. But if you look at the population that's covered by these states, it is significant. So you can really roll out an eClosing system on and cover a very broad market. So Fannie Mae and Freddie Mac continue to expand their acceptance of eNotes and eClosings that support RON. They have 45 states. And then also MISMO is taking a very active lead in RON and RON certification. MISMO has a specific certification for RON providers to make sure that they meet a generally accepted set of standards. And there are over 10 providers that are certified now with MISMO for RON, including First American Docutech, Notarize, many of our partners and participants that are in the space. So back to what's going to happen in 2021. I'll defer back to Yogi Berra here about the difficulties of making predictions about the future. But I think it's fair to say that we're going to continue to see governments respond to the pandemic, especially, and understand the need for electronic processes and procedures to deal with circumstances that may arise from time to time. You've got a lot of activity taking place from a legislative perspective for RON. 15 states have got legislative activity some form of legislative activity taking place. And then there's also federal RON activity. There was a bill that was introduced at the very beginning of the pandemic that did not go anywhere. But now it has been reintroduced here as a couple of weeks ago to implement RON on a federal basis. And I think that there are several benefits to implementing RON on a nationwide basis. Just the nature of remote online notarization itself lends to the scenario where you're going to have a notary in a different state than where the borrower is located or where the property is located. And so when that happens, the notarial certificate and the language that has to be utilized is the certificate and the language that that applies to the notary where they are commissioned. And so you're going to see more and more scenarios where there's a Virginia eNotary block and seal that is applied to an Idaho mortgage. And the question becomes, well, are you going to have some issues with the county recorder in the state of Idaho that sees something that they're not used to on one of these mortgages? And while the laws, if you look at the laws in those jurisdictions, they would allow for that to take place, there's just uncertainty at the recorder level, and it can just cause noise and confusion. I think when it comes to remote online notarization, just like I said, the nature of the transaction, and it's going to cross state borders with different parties. If there's a uniform standard that can be implemented, it just cuts down some of that noise and makes things easier. So while notaries and notarial statutes and acts have traditionally been governed by states, I think that there is a strong argument just on an efficiency basis for a federal government standard here. So I'm hopeful that this new legislation, well, the legislation that has really been reintroduced, will find some traction out there, but we shall see. There is continued to be a focus on digital identity, being able to prove your identity. Consumer and notary awareness and education is out there. You continue to see collaboration between trade groups to make these things happen, and tech companies also are issuing policies and working together and building integrations to make this whole ecosystem work and to make it be really effective for lenders to just add to the efficiency of the process, to cut the cost of the process down, and to just make it better for consumers, because consumers really do expect to be able to do as much as they can in an electronic format. It's just so much more convenient. So there are some predictions here about where some of these transactions might go. I'm not sure. I'm like Yogi Berra predicting the future. Predictions are difficult, especially those that are about the future. So we'll see what happens, but it looks like things are going to continue to increase and accelerate. So key takeaways here: e-mortgages are on the rise. RON understanding continues to grow. Plug and play, meaning that all of the parties that are involved in this process are integrating together and making it easy to move these transactions through the lending ecosystem. And then there are significant, what we call checks and balances to ensure that the security features that are in place for these systems when it comes to e-signatures and for remote online notarization, those processes and features are in place to help maintain the integrity of the transaction. And in my opinion, in many, many circumstances, improve the integrity of the transaction. So as you look at the settlement experience, we call it the digital dance. And there is, when you look at you've got the consumer and you've got the lender and you've got the title and the escrow officer, and they're all moving to try to make this transaction happen. And so when you're dealing with e-closing systems, you've got to have systems that make it easy and simple for all of these parties to communicate and to collaborate, so that clear to close situation can happen, and that there's no confusion, and that everything can move slowly through the process. And so you've just got to build a system, and there are many systems out there that can make this happen. And so it's very important to be able to satisfy all three of these parties so that they can dance all together, so to speak. So these are some stats that we also received from ICE Mortgage Technology about just the increase in settlement agents and branches who have performed an eClose. So when we ran these statistics in April, there were, and I'm sure it's greater now, there were over 13,000 settlement branches. There's probably, we're probably well above this number right now, but at the time, north of 13,000 settlement branches that had closed at least one eClose package, and almost 18,000 unique agents who had worked on an eClose package. Now, to put that in perspective, that was a 1,952% increase in agents performing an eClosing since Q4 of 2020. So the pandemic just really changed the ballgame here, and we continue to see growth in eClose. So takeaways from settlement. You want to make it easy for all of the parties, especially the settlement agent. Automate messaging to the borrower so that they know what to expect when they need to perform what action. These systems can be designed to do this very, very well, to keep the borrower more informed than they've ever been and to help them understand what's next. And then all these parties have to be able to work together so that we can hit that clear to close moment and execute the eClosing. I want to touch for a few minutes here on post-closing. So we've already talked about the ability to e-record in counties that make up 88% of the population of the United States. E-recording there's so many advantages to e-recording, but the main one is that the security instruments can be transferred electronically and recorded quicker and more accurate, more quickly and with better accuracy than they can in a paper world. So there's no need to, if you're using a fully digital transaction where your security instrument is electronic, there's no need to print and scan or mail these documents, and you don't have to deal with keeping track of them and losing them and all the headaches that can come along with that. And so there are just a lot of advantages to, number one, e-recording, but also e-recording with a digital mortgage. And it just makes everything faster. It makes the process more efficient and more transparent. And another thing to talk about post-closing would be the eVault. So you've got to have an eVault so that you can maintain and manage your eNotes. The eVault needs to be integrated with the MERS e-registry so that there is a record kept of who owns the notes and where the notes are located. So it allows the eVault allows you to store, view, and share all of the documents in the loan, including all of this data that you wouldn't have before, including signatures, statuses, responses, and you can share all of this information with all of the parties that are involved in the transaction. So eVault allows you to really expedite your cycles, reduce the delivery costs, because these loans can be delivered electronically. Everything is faster. It improves your accuracy and compliance because you're not dealing with, with paper files. And once the loan is stored in an eVault, you have an audit trail that ensures the integrity and the accuracy of all of the data that's associated with that file. So the eVault is crucial, and it also adds a significant amount of efficiency and cost savings to the process. LOS Pushback, loan origination system pushback, is also something that's very, very helpful when it comes to post-closing. So the loan origination, you can take from a document generation system like we have at First American Docutech. We can take the events when these documents are signed, the data that's in the documents, anything that happens during the closing process, and we can push all of this data back into the LOS so that there is data that shows what data was used to generate the documents. You've got the documents themselves, and then all of the events that were associated with the documents, when they were viewed, when they were signed, the entire audit trail. You can also include the final title documents in this process, and they can all be pushed back and stored in the LOS along with an audit trail that can be used to go back and clarify any questions or disputes, and also ensure that you have all the information that you need with respect to that transaction. So LOS pushback is extremely helpful in a post-close scenario. So key takeaways on post-close, e-recording, a lot of benefits, the necessity and benefits of utilizing an eVault with your eNotes and other documents, and then bidirectional flow of data between your systems is very crucial to ensure that audit trail as well as status of what's going on with each of these loan files. So as I mentioned, First American Docutech, we do have a system that has all of these functionalities built in with integrations into all of the other systems that exist in the ecosystem to make sure that you have a complete end-to-end closing platform, and it allows you to easily make every transaction as easy as it can be. One of the things that's really, really important, and we touched on this already, was the consumer experience has got to be excellent. That's, in an environment where you are competing for market share, the consumer experience is crucial, and they expect for it to be easy and for it to be as electronic as it can be. Then you also have to have an e-closing process that works with settlement agents, right? And how that's going to work, how you're going to communicate with the settlement agent, how their documents are going to be tagged and uploaded for signatures, how statuses are going to be communicated, and then the lender also has to play a huge role in this scenario here. And if you look at the Solex eClosing system, it has all of these capabilities built into it, and it's a very mature system to make sure that all of these parties are satisfied with the experience. If you're interested, you can go to our website, docutech.com, and request a demo. And we can touch on some of the Ezra public policy initiatives.
All right, great. Thank you so much, Fred, for sharing such valuable information and content with our audience today. Really quickly, I am going to give you a public policy overview for Ezra. The Public Policy Committee meets monthly to address current issues relating to electronic signatures and records, including support of uniform statutes for electronic will legislation, reasonable standards for acceptance of e-signed IRS forms, support of uniform tech-neutral legislation for blockchain, remote online notarization, acceptance of eNotes as collateral for Federal Reserve and Federal Home Loan Banks, acceptance of e-sign power of attorney for vehicle titling agencies, and support of reasonable federal standards for eOdometer certifications. You can find more about Ezra in the series at our website, esignrecords.org. Of course, we hope you join Ezra and gain the benefit of the combined expertise of our members and support our advocating for a trusted digital economy for all. On behalf of Ezra and our speaker, thank you for joining us today.